Welcome to this explainer. Look, if you're watching this, chances are you're an overwhelmed beginner or maybe you're an intermediate trader who is just completely exhausted. We've all been there, right? You've probably stayed up way too late, staring at your screen, furiously scrolling through YouTube, trying to find that one magical 95% win rate strategy. You're trying to figure out how to take a modest $1,000 account and turn it into real life-changing money without accidentally blowing the whole thing up in the process. I see you, and I know exactly how draining that cycle is. Well, today, we're going to cure that anxiety. We're taking a deep dive into the source material that proves why growing a small account really isn't about finding some magic formula.
Our brains literally hate uncertainty. We crave comfort, security, and that feeling of being in control. And honestly, that is exactly why those viral videos promising a killer entry model or a super secret indicator get so many views. But let's burst that bubble right now. The myth that you are just one secret strategy away from profitability is exactly what's keeping you stuck. There are traders making serious money right now using literal moving averages from 2009. It is not the strategy you're missing. It's something much, much deeper.
I love this quote. Trading doesn't pay the smartest people. It pays the most emotionally stable people. So the crucial point here is that the market does not care about your IQ, and it definitely doesn't care about your luck. Success in trading actually comes down to having a really boring, disciplined, and entirely repeatable mindset. The traders who win don't necessarily trade better than you do. They just think better than you do. Today, we're breaking down the 10 mental habits that actually scale an account.
Okay, let's dive right into this roadmap. We are going to cover 1. The overwhelmed trader's trap. 2. Building identity and patience. 3. Taming your market emotions. 4. Mastering the long game. 5. Process over perfect outcomes. And finally, 6. Your weekly reflection checklist.
All right, let's kick things off with Section 1, the overwhelmed trader's trap. Here's why small accounts completely expose your psychology. When you're trading with a $1,000 account, man, everything just feels incredibly personal. Every single loss feels like this profound disrespect. And this exposes one of the absolute biggest lies in trading, the idea that if I just had more money, I'd finally be profitable. The harsh reality is that habits do not magically fix themselves when you add a few zeros to your account balance. They scale. If you have bad mental habits with a small account, where losses feel super heavy and trigger desperate overtrading, you're not going to be disciplined with $10,000. You're just going to destroy a much larger account way faster because those exact same dangerous behaviors just scale right up with the capital. Which leads us to a highly destructive mindset. I'm not ending today like this. This single phrase has probably destroyed more accounts than any bad strategy in the history of trading. When you say this out loud, you're no longer trading, you are fighting. You're trying to punish the market to win back your pride. And you know what that leads to? Impulse entries, doubling down, and ultimately a total loss of self-trust. We literally have to eliminate this phrase from your vocabulary.
Moving right along to Section 2, Building Identity and Patience. This is where we lay the foundation with habits 1 and 2.
So habit number 1 is respecting time. Too many of us treat the market like an emergency room, like we need to make money right this second. But respecting time means understanding that real growth requires surviving long enough for the math of compounding to actually work out in your favor. Survival is step 1. Want a great daily application for this habit? Stop checking your P&L every 5 minutes. Let the process play out.
And this brilliantly illustrates habit number 2, identity-based discipline. Relying on motivation is saying, I'm trying to be disciplined. It's a wish. And honestly, it's negotiable. But true discipline, that's an identity. When you say, I am a disciplined trader, following your rules isn't some massive daily struggle. It becomes an automatic standard. You follow the rules because breaking them would literally feel like disrespecting your own identity. Next up is Section 3, Taming your market emotions. We're going to talk about staying grounded with habits 3, 4, and 5. Habit number 3 is emotional neutrality. Look, the market doesn't pay emotional people. It pays consistent people. An amateur gets super euphoric on their wins and incredibly fearful on their losses. But a professional, they're completely neutral. They treat their money simply as math. A highly effective daily application for this is to take a completely valid setup that unfortunately hits your stop loss, look at it, and just simply say aloud, okay. No anger, no revenge, just okay. Habit 4 is risk humility. The market absolutely loves to punish ego and arrogance. The very moment you start thinking you're invincible and start disrespecting your risk is the exact moment the market takes your money back. You have to treat risk as sacred. Your daily application here is critical. Keep your position sizes identical and strictly within your plan,
even if you are on an incredible winning streak. Never assume you're above the rules. Habit 5 is boredom tolerance. If you constantly need action, stimulation, and a dopamine hit from the market, you aren't really a trader, you're a market addict. Profitable trading is actually shockingly boring. So your daily application, sit on your hands and force yourself to watch a live chart for 30 minutes straight without clicking a single button. You've got to get comfortable with the wait. All right, moving to section 4, mastering the long game. Let's look at sustaining that success with habits 6, 7, and 8.
Now, what's really interesting about this slide is habit 6, delayed gratification. It's the ability to see a potentially massive market move, feel that intense temptation to over-leverage to catch a huge win, and intentionally saying no. Rejecting that big win fantasy is precisely what separates the professionals who trust their process from the gamblers who are desperately relying on luck.
Habit 7 is self-honesty. You absolutely cannot fix a problem if you refuse to admit it exists. You have to stop blaming the spreads, your broker, or some imaginary market manipulation. Start admitting to your own rule breaks and impulsive entries. Your daily application here is to journal with brutal honesty. Ask yourself, was that last trade a genuine, planned setup, or was it just a gamble because I was bored?
Habit 8 is emotional recovery speed. Carrying the pain of yesterday's loss into your next trading session is exactly how you turn one bad day into a highly destructive week. Fast recovery is a trainable skill. Take the loss gracefully, remind yourself that one single outcome does not define your self-worth, and intentionally hit the mental reset button so you can trade totally clean tomorrow.
Almost there. Section 5, process over perfect outcomes, finalizing the shift with habits 9 and 10.
Habit 9 is process obsession. When you win on a bad trade, you are literally teaching yourself the wrong lesson. You're rewarding bad behavior. We need to flip the script entirely. Stop asking yourself, did I win? And start obsessively asking, did I follow the plan? Your daily application is to treat every single outcome, both the wins and the losses, purely as neutral data and information to refine your execution. Let's move to and see how this builds directly into our final mental habit, confidence versus entitlement. Entitlement is thinking that just because you followed your rules, the market somehow owes you a win. Entitlement breeds anger and revenge trading. True confidence, on the other hand, says, hey, I executed perfectly, I know I have an edge, and I completely accept that the outcome of this specific trade is entirely uncertain.
Finally, Section 6, your weekly reflection checklist. Let's look at a concrete tool to actually track these mental habits.
This checklist is an amazing tool to help you reclaim your sense of control, especially if you're feeling overwhelmed by the mental hurdles of trading. I highly recommend taking a screenshot of this slide right now. Keep it on your desktop or print it out. Every single Friday, after the markets close, sit down and ask yourself these exact questions. Did you respect the timeline? Were you neutral? Did you tolerate the boredom? Reviewing this checklist weekly is exactly how you anchor your new professional identity and keep that overwhelmed, desperate version of yourself far, far away. I'm going to leave you with this final provocative thought. If you are struggling to grow that small account, it's not because you're cursed, and it's certainly not because you lack a secret strategy. It's because the market only pays the disciplined, calm, and patient version of you. So ask yourself today, which version of you is currently clicking the buttons? Build the habits of the trader who actually deserves the $10,000, and trust me, the money will follow. Thanks for joining me on this explainer, and I'll catch you next time.